Hi, welcome to the marketplace. Coming up, commercial banks now required to submit recapitalization plans by September this year.
And we will be following up on that to ensure that banks, instead of distributing profits that they have started making, use those resources to rebuild, their capital buffers.
Also coming up, government fails to achieve its Treasury Bills target despite receiving the first tranche of an International Monetary Fund bailout package last Friday. Plus, African Export-Import Bank hints at taking over some defunct multinational banks on the continent to boost various economies.
We want to be like other countries because Americans own American banks, Europeans own European banks, Chinese own Chinese banks, Indians own Indian banks. Africans should own the majority of African banks.
My name is Daryl. Kwawu. Thanks for being with us. Details coming up. And welcome back. First up, commercial banks are now required to submit recapitalization plans by September this year. Governor of the Bank of Ghana, Dr. Addison, disclosed this after announcing the regulator's decision to keep the policy rate at 29.5%.
Yes, the impact of the exchange has been to reduce the capital buffers of banks. So if you look at the analysis that was done, when we take cognizance of the 3% additional buffer, right? The banks would need to add up to their capital. Right now, we have reduced the capital adequacy ratio to 10%. And we are hoping that over the next 3 years, the banks would be able to rebuild their capital buffers. And hopefully at that time, we may bring in the additional 3%. Capital buffers. So yes, most banks are working towards that. They have been given a period, I think up to September, to submit to us what their recapitalization plans are. And we will be following up on that to ensure that banks, instead of distributing profits that they have started making, use those resources to rebuild, their capital buffers.
And that was Governor of the Central Bank, Dr. Addison, speaking to the press yesterday when the Central Bank announced a new policy rate. We want to bring in lead at GCB Capital, Courage Buti. We'll talk about the policy rate in a bit. But first, though, Courage, I understand that the Central Bank would want to ensure banks build strong buffers, but seeing what local banks have had to go through as a result of the debt exchange program, can they raise the required capital?
The multi-million question. Good afternoon to your listeners. I guess the answer is in the fact that the Bank of Ghana is not asking them to do that by September, but is asking them to do it over the next 3 years. It makes a lot of difference. For the foreign banks, it might not be too much of a challenge. I heard the Stanbic, the parent bank, say they are recapitalizing Stanbic Ghana, so no problem with that. The Barclays and the other multinationals, they could probably easily get funding from their parent company. For the Ghana-based banks, dominantly owned by Ghanaians, with the kind of economy, the loss of market access and then the downgrades and all of that, really, it might be difficult to attract investment immediately into some of these banks. So the provision from the World Bank, $250 million towards the Ghana Financial Sector Stabilization Fund, and probably what will come from government and others, the indication is that they have signaled that they want to channel some of those resources into shoring up the capital of banks so they avoid insolvency. So I guess that becomes maybe one window of hope as we are waiting the economy improving, and probably they can tap into the other options available to them. But between now and maybe 3 years, if these banks are generating profit from what the governor is saying, it looks like it's the buffers that has been taking off really. And there are three maybe different types of capital: your tier one, your additional tier one, and of course tier two, then the other things that come along. And so I guess even profitability, if things recover as we expect, then maybe they could be closing that gap, and what will be left to do on the market may not be as much. But it has a 3-year window to do that.
I mean, one question that keeps coming up is about the Ghana Financial Stability Fund, which was created for the purpose of providing support for the banks impacted by the DDEP. Why would banks then be required to recapitalize?
Well, the banks even need a capital more. You know the thing called single obligor limit, the amount you can lend to a single entity, really. So the more your capital, the more you can lend. So if you are a player in, say, the mining industry, with your capital reducing, it affects your obligor limit, really. So if you are lending to Newmont or Anglo Gold or stuff like that, limit how much you could really give them. And even it could even affect your business with them if you are not able to meet their financial needs, really. So that is why banks always have capital more than what the minimum capital requirement is, really, so they can meet those other large ticket transactions. So it's in their best interest to actually capitalize and get back to where they were, even higher, so that they can be able to do large ticket transactions going forward.
I wouldn't want to preempt what happens, but in the event that some commercial banks do not present a plausible plan by September, what do you anticipate would be the central bank's next move?
I don't think the situation is that dire. From the financials we've seen so far, 2022 financials, it looks like it's just one entity from those who are published that have a capital adequacy ratio below the regulatory threshold. For most of them, it's just around that or slightly higher, really. So it doesn't look like the problem is as big. And you see, the forbearance allows them to spread the expected credit losses over the next 3 years, really. So they would have to take that gradually. And so you do not, unless there is another extra shock, of course, there is T-bills restructuring coming up, domestic dollar debts restructuring coming up, and maybe things like that. But the impact of that on their balance sheet may not be so severe, really. So the problem is not that huge, but they need to get back the buffers and they need to build capital beyond the regulatory requirements so they can be able to support the economy more actively. I guess that is what it's more about, rather than the risk of some banks going down, really.
All right, let's switch to the policy rate, because yesterday the central bank decided to maintain it at 29.5%. Your reaction to that?
Well, it's not a surprise. Yes, there are emerging risks to inflation. You could see the revenue measures that have been implemented have inflation consequences. There has been already 2 hikes in utility tariff, particularly electricity. Water is pending, I think, somewhere 1st January or so, and things like that, really. So those are the upside pressures. But largely, the cost pressures that have driven inflation so far talk about the cedi depreciation. The cedi has gotten a certain relative stability so far around the current levels we are seeing. Petroleum prices at the pumps have actually also declined all through this period, really. We've seen also that with the official start of the IMF program, the memorandum on zero deficit financing is actually in place and should help curtail inflation. Now, the monetization of deficit was a big part of the inflation last year. So if that component is taken out, and we are actually hoping that under the supervision of IMF, the monetary and fiscal controls will be much tighter to keep things going. And of course, coupled with the tight monetary policy stance the Bank of Ghana is maintaining, I think there is enough anchor to keep inflation declining. If nothing at all, a base pull effect is in place, and its weight in the decline is actually quite significant, really. So I think with the balance of risk weighing heavily on growth, it is appropriate that probably we begin to look at ways to support the economy, even if not injecting liquidity, to at least sustain things the way they are, hoping that the reforms bring about the much needed private capital to stimulate growth when government is doing consolidation.
Finally, I know for the business community, they would be looking forward to a decline in the policy rate in the coming months. if government is able to rein in inflation following this bailout package by the IMF. So when do we see things trickle down, do you anticipate?
Well, it will be too soon in July, probably also September, but it will also depend on where inflation is at the time. The most important thing is that it is not just headline declining, core inflation is also declining. And that is actually a measure of the price pressures we are seeing and whether they are receding as we expect them to be. So with core also declining, there is hope, but by September, will inflation have declined close to whatever it is, 41.2, is still significantly outside the target band, really. So there is still the need to sustain the tight stance. And I guess that is what the IMF is saying in their technical papers, that we need to maintain that tight stance and an increasingly flexible exchange rate regime to be able to anchor inflation expectations and currency stability, really. So I guess from now on, it will be caution. Probably we see a hold around this level for a while until inflation significantly journeys towards the target band, then we may begin to see a cut. And I dare say the same way it went up, it could come down same way. Nothing stops the Bank of Ghana from cutting the policy rate by 500, 400, 300 basis points in one meeting if the need be. But it will be important for policy consistency and signaling that we ensure inflation is in a clear path of decline. And the shocks that are emerging, we certain that it will not overly distort the momentum before we can begin to unwind a bit. So for now, they will maintain around these levels.
All right, Courage Boti, research lead at GCB Capital. Thank you so much for your perspective. Now, government failed to achieve its Treasury Bills target despite receiving the first tranche of an International Monetary Fund bailout package last Friday. It was expected that investor confidence would soar. Yet again, interest rates went up despite the arrival of the funds. Patrick Edem Agama is head of trading at Republic Securities. He joins us on Zoom with more on this. Patrick, give us an update, a bit more detail about how last Friday's auction went.
So good afternoon. On the money market last week, we saw that the government had a target of 2.732 billion, but was able to raise 2.728 billion, and it fell short by 3.98 million. It was really a small undersubscription, but with regards to where the interest rates went up, we saw that the 91-day cleared upwards, jumping by 13.14 basis points and took about 73.9% of the total bids accepted. The 182-day closed at 23.36, inching up by 39.38 basis points, and also taking about 26.1% of total bids accepted. It was again clear that the highest bids that were accepted went up slightly to as high as 20.79 for the 182-day, for the 91-day, and then as high as 23.75 for the 182-day. This again is showing where the appetite of investors are, and they keep raising it bit by bit. But there's a little resistance, and I believe the Bank of Ghana can make arrangement to take advantage of that resistance to reverse the rates.
Should we read anything into government not being able to meet its target despite the good news of an IMF bailout?
Well, this target was relatively higher than the normal 2 billion range we see. So this is nothing, we don't have to read any meaning for now. We are expecting that the coming week, which is this week, we expect a 3.4 billion, which is also relatively higher than the targets we've been seeing in the week. So we don't expect the government to meet this target fully because it's relatively higher.
It's also remarkable to note that interest rates are also going up still. And how soon should we see a surge in investor confidence?
Well, investors are putting their eyes on so many indicators, and it's good that the policy rate was maintained, and it's also showing that there is a turning point. Investors are actually saying that and expecting more from the market. Again, the confidence level that we expect the IMF decision to bring to the market is yet to be felt. Again, we'll be able to see this clearly when credit rating agencies begin to change their reviews about the country and the market before investors can again trust the market and push their money in.
Okay, and how about the capital market, the stock market for that matter? Is the announcement of a bailout expected to impact trading this week?
Yes, we are seeing interest mount in stocks like Farm Milk and MTN, but there's still significant pressure on banking stocks as offers outweigh the bids. Even the few bids we see in the banking stocks, we are seeing them below their market prices, which is an indication that the price can drop. For last week, we saw stocks like Unilever and Total inching up slightly, but stocks like Societe, MTN, Stanchart, and New Gold ETF lost some pesos to close lower. So we expect this to continue for some time. For today like this, we saw Total inching up by 2 pesos and GCB dropping by 4 pesos. Although the market is still in session, it's a sign that there is still uncertainty in the market, but we expect this to correct over time.
All right, Patrick Agama, Head of Trading at Republic Securities. Appreciate the update. We'll keep watching the markets with updates for our viewers subsequently. Now, the African Export-Import Bank has hinted at taking over some defunct multinational banks on the continent to boost various economies. According to the president and chairman of the board of directors of the bank, Professor Benedict Orama, the bank will further strengthen its trade finance to support various commercial banks within the sub-region to support businesses. This, he says, will attract more foreign direct investments. Professor Orama was speaking at the launch of the 30th annual meetings to be hosted in Ghana.
We also put together an Africa Trade Exchange, a digital platform that we've used to pool the demand for food, for fertilizers, that is very possible for every country, whether they are small island economies or large economies, to buy these items at the same cost and get supported by Afreximbank. It's inconceivable that any of this would have been possible without an Afreximbank being there. And if you look around, today many international banks are exiting the continent. Under a strategy that Afreximbank is implementing, we are making sure that these banks are acquired by African financial institutions, because that is the only way to bring stability to our financial system. A situation where our banks are dominated by foreign-owned institutions is not that healthy. While we welcome foreign investors, we want to be like other countries, because Americans own American banks, Europeans own European banks, Chinese own Chinese banks, Indians own Indian banks. Africans should own the majority of African banks if we want to avoid stability. Achieve stability in the continent. So these are some of the things. Of course, we can go on the manufacturing side and the many other things that the bank has been able to do in these 30 years.
Now, former President John Mahama has promised a 5G revolution and artificial intelligence to fully unlock the potential of digitalization when he becomes president. According to him, his government will invest and leverage digital infrastructure to expand and enhance productivity in various sectors of the economy. The former president was keynote speaker at the 7th Ghana CEO Summit here in Accra.
Just as 4G network was introduced when I was president, it is my wish that the full rollout of 5G, the 5G revolution, and the full integration of AI as a facilitator for our productivity will happen under my next tenure as president by the grace of God. By investing further in digital infrastructure, as we did with the Accra Digital Center, the National Data Center, the Digital Terrestrial Television Network, by promoting digital literacy, and by fostering innovation, we can unlock the full potential of our nation and seize opportunities presented by the digital age to enhance productivity and create high-quality jobs for our people. If with 4G internet, we have seen a transformation in digital broadcasting, the music, film, tourism, and sports industries, then I say, let us wait and see 5G. Technology has become a powerful tool, and we must restructure our nation in education, in business, in healthcare, amongst others, to be ready for this industrial change of man versus bots. Tech companies around the world, Apple and Samsung, whom I'll be visiting while in Korea, are making huge profits out of new technologies. Tech companies in our country may not be in the same category, but the potential for optimal productivity, profits, and employment remains very high.
Now, the German government has launched an initiative to support tech-related and innovative startups in Ghana. The Star Africa initiative, funded by the German Federal Ministry for Economic Affairs and Climate Action, will help build entrepreneurs in the area for the German market. German Ambassador Daryl believes the initiative has the potential to improve the economic exchange between the two countries. Nanaya Ojima was at the launch of Star Africa, Startup Germany Africa project in Ghana, and filed this report.
The initiative, being implemented by the Koblenz University, was extended to Ghana after a successful pilot in Rwanda. The partnership with the African Institute of Mathematical Sciences will provide aspiring local entrepreneurs with the modern innovative idea to compete globally. German Ambassador Daryl, speaking at the launch, assured his government's preparedness to aid in training the African youth to take advantage of global opportunities.
And in German industry today, there is a need of 400,000 qualified workers, labor, scientists, you name it, every year. 400,000. Today, the German embassy issues visa for qualified labor, or those who want to qualify, those who want to study. No, study is different, but who want to have a training in Germany to qualify for these postings. It's 100 a year. So there's a huge gap. I'm not saying that Ghana will be able to fill all these 400,000, but I'm just saying is that there are very many opportunities. There are very good chances for those who would like to add to their career some international experience. And I think that is what Ghana desperately needs.
The program, being implemented by the University of Koblenz with some local partners, will take up 2 cohorts of entrepreneurs in a year. Each of the cohorts will spend 10 months in the incubation. Professor Harald von Kofflesch is head of the project.
The plan for the project is to prove that within 1 year we are able to apply for an entrepreneurship scholarship together with us, our support, for at least 3 to 5 student teams who have an idea. We call them global ideas, which could also fit the German market, and then we can apply together for the scholarship and hope that they become successful entrepreneurs in Germany.
Meanwhile, the Ministry of Education has reiterated its preparedness to partner the project in educating startups.
Now, Chief Executive Officer of Global Ovations, Gideon Raji, has called on Parliament to expedite the passage of the Consumer Protection Law to empower, protect and enhance the welfare and interests of consumers. He says this will promote a fair, transparent and efficient marketplace, as well as improve consumer awareness, education and information. He spoke to Joy Business at a national fast-moving consumer goods event.
I believe that the bill is basically to protect every consumer, and also to also for consumers to be careful about what they take in, and for brands or producers, manufacturers to be careful about what they put out there. So I think it's in the right direction, but I think they have to work together with manufacturing companies. You just don't put a bill out there. You work with them, seek for their opinion, seek for their views, so that you can see that whatever that you're doing, it's working. The synergy needs to be there so that it will be a win-win for everyone. So basically, that's what it's about. As a sector within the industry, which is not, people don't, if you talk about FMCG product, people barely know about it. So basically, we created a National FMCG Summit and Awards to celebrate people or the marketers behind the brands we see. Many a times when we go to the malls, when we go to the shops, we find different brands. And this event has developed for them. dedicated to them so that people would also have hope that, okay, these brands are quality. Where they win the award based on the quality and the innovations that they do. So basically, that's what the event is about.
All right, and that's the marketplace. Thanks for watching, everyone. You can read more about what's happening on the money market. T-bills auction, government to borrow 3.43 billion cedis this week. myjoyonline.com/business. My name is Daryl. Kwawu. Thanks for watching. We will be back same time tomorrow.
Hi there. Welcome back to Money Lab. My name is Nadoli Avevo, your life insurance friend for today. On our last episode, we spoke about matching your needs to the right life insurance product. Today, I'll give you further tips on buying life insurance product. Now, be cautious when buying life insurance products. Choose one that is easy on your pocket. Buy one that suits your needs. Also know that life insurance is age sensitive. The earlier you buy it, the better. But whatever your age, speak to your life insurance provider. See you next time on Money Lab.